In today's video, I'm going to teach you how to add rental income in ProjectionLab. By the end, you'll know exactly how to set up a property so its rent and expenses flow into your plan accurately and automatically. Start by opening ProjectionLab and going to your plan. This is where all of your timelines, accounts, and assumptions live, so it's the right place to add anything that affects cash flow. If you work with multiple plans or scenarios, make sure you're in the one you want to update so the changes land in the correct projection. Next, head to Real Assets. You'll find this in the navigation alongside your investment and cash accounts. Real Assets is designed for things like primary homes, rental properties, and other tangible assets. And it's the section that tells your plan how property values, mortgages, and rent should behave over time. Now create a housing asset. In the Assets area, choose to add a new housing asset. Give it a clear name so you'll recognize it later, like downtown rental or duplex unit. If there's a spot for location or notes, use it to capture anything that will help you remember key details at a glance, such as the neighborhood or unit number. Configure the settings carefully, because this is what drives your rental income and expenses. In the purchase details, set the purchase price, the closing date or acquisition date, and any one-time costs like closing fees or renovation work you're doing up front. In the financing section, enter the down payment, interest rate, loan term, and any points or private mortgage insurance if they apply. If your mortgage is still in progress, align the start date so payments begin when you expect them to. Under usage, mark this property as a rental. Enter the monthly rent when you expect it to start and how long you intend to rent it out. If you anticipate vacancies, include a vacancy rate so the plan doesn't assume 100% occupancy. You can also set annual rent growth if you expect rent to rise over time. Don't forget ongoing costs, property taxes, insurance, maintenance, repairs, utilities you cover, HOA dues, and a reserve for unexpected issues. These can be entered so they reduce the net income realistically. If you plan to sell at a certain date, add that timing and any expected selling costs so the plan knows when to remove rent and realize proceeds. When everything looks right, click Add. Your rental property will now appear in Real Assets. Its value will show up in your net worth, and the rent and expenses will flow through your cash flow. You can revisit the asset anytime to tweak assumptions and see how changes affect your plan.